Well, good morning. Today is Monday. Welcome to a new week. This is August 12th today. So, my name is Daniel McCrane. I am with McCrane Associates Incorporated. And just to tell you a little bit about what we do briefly as I start this video. Clients come to us because they just seem to have hit a wall with their profitability and how to grow their business. They work really hard at it themselves and make some progress, but then they just seem to hit that wall, seem to hit the end of themselves, and so they come to us for strategies to use for profitability that they may not have thought of themselves. And then for the growth and scalability, they come to us for the systems that we implement in business. And then finally, we've got clients who come to us because they want to leave a legacy in their business. They want the business to survive when they decide to exit the business someday in the future. So we work with them on long-term planning to make that happen. So that's a little bit about McCrane Associates. So there are some things that you need to know about different business entities when you are setting up your business and when you're thinking about how you're going to get out of your business. So it's very common. There are a lot of small business owners out there who set up their business as an LLC, and nothing wrong with that. Don't take this as any kind of judgment, right or wrong. Okay, this is just an informational video this morning. And sometimes a company will choose to set up as a corporation. Now, a lot of times, then people will convert those LLCs or corporations into S corporations to file their taxes. And I should probably do a video about why that may not be the best situation all the time. But let's talk about a straight up C corporation for today, for this moment. And think of a C corporation. There we go. We're doing this live. So there goes the dog. Think of a C corporation as a box. Okay, you've got a solid box. This box has a solid bottom to it and then solid walls. Money comes in the top of the box, but then to get money out of the box, taxes have to be paid. And the nice thing about a corporation is the corporation pays its own taxes. Now, at the time of this recording, the tax rate for corporations is 21%. That may change in the future, depending on how the winds of whatever we want to say, depending on how the winds prevail in Washington, D.C. on any given day or any given regime out there. But anyway, whatever. So it's currently 21%. So let's say that you sell your business for a nice amount, a good amount. Let's say it's going to be $250,000. So you'll be receiving $250,000 for the sale of your business. Now, with an asset sale, you are not selling your corporation. You are selling all of the assets, all of the operations, all of the goodwill, all of the client lists, everything else that were part of your company. All of that stuff comes out, it goes in somebody else's box. You get to keep your box. What you have now inside your box is $250,000 or whatever the sale price was. Your corporation will pay 21% of the gains of the sale. Now, some people out there are going to watch this and they're going to say, wait a minute, it's a little more complicated than that. Some is going to be classified as income, others as capital gains. Okay, yeah, I get it. I get it. Let me keep it simple for just a moment. So 21% on the sale of the assets inside this business. Now compare that to if you took $250,000 yourself from the sale of that business, you would instantly be paying the top tax bracket, which I haven't looked it up recently. I'm remembering it might be around 34, 37%, something like that. Look it up, be safe, be sure, work with your accountant. So which would you rather pay? Would you rather have your corporation pay 21% tax, or would you rather pay 34 or 37%? So anyway, that's just one of the things to think about with taxation of corporations when it comes to selling your business. So in the future, I'll do another video about LLCs as well, the taxability of selling the assets and all the goodwill and everything else that I mentioned through an LLC. We'll talk about what that would look like as well. So I'm going to go ahead and stop right there for today. I think that's enough for today. So I will see